I started note-for-note accounting for bands and musicians 8 years ago, 9 years ago. I started it in Denver. Mr. Andy Art over here is one of my tax clients, so it's really nice to have him here.
Whoa.
And his wife as well. I do work with other businesses besides bands and musicians. It's a pretty common question I get. California legalized cannabis in January 1st, 2018, so I also started 420 Financial Solutions, so I work with a bunch of cannabis businesses. So if you guys know anybody that needs help with any of that stuff, you're more than welcome to send them my way. So it's been a pretty crazy year with all the cannabis stuff, so definitely had my work cut out for me. But yeah, I mean, I mostly try to help self-employed individual artists, so that's kind of the majority of people I work with. So, okay, so we're basically just going to start out from the beginning. I'm just going to kind of act like you guys don't know anything about taxes, okay? So try to keep it simple. Are the majority of you guys strictly self-employed, or are you guys self-employed and also have a part-time job? Because I feel like the majority of musicians and artists do have a part-time job that they get a W-2 for. So if you're 100% self-employed, you are going to get a 1099 at the end of the year from anybody that paid you $600 or more. And that is the opposite also. If you paid anybody out $600 or more in the entire year, you have to give them a 1099 also, okay? So basically you have to keep track of all the people that are paying you. So a really good tip is to make a spreadsheet of all the venues that you play at. So at the end of the year, you know 100% how many 1099s you are going to get, okay? Because what happens so much is that people go to file their tax return and they just never got a 1099 in the mail because they moved or it just didn't get sent to them. The venue didn't, do it for them. So they have to end up, amending their tax return and changing it because they forgot to include that income. So it's always a good idea to just have that list of all the venues you're playing at, so you know exactly which 1099s you're getting. And same with the payouts. Just have that list of all the people you pay $600 or more to, so you know exactly, which 1099s are going out. If you have a part-time job as well, at some place like Starbucks, or you're serving somewhere, you will get a W-2. So you can have as many 1099s as possible, and you can have as many W-2s, as many jobs as you can possibly work. So it's just important that wherever you work, they have your correct address, so you're getting all your forms, okay? Most people who have a W-2 as well as the self-employed income, a lot of people are seeing refunds. They get a small refund. I think a lot of people expect refunds when they have a W-2, but that's not always the case. So you just have to have to know your situation on a monthly basis, because now that the tax reform has changed a bunch of things, a lot more people are not going to be getting refunds. So more people are going to owe, but it's so each of your situations is so unique and specific to you. So you just have to figure out, in your life, if you have a W-2 and a 1099, if you're going to owe or if you're going to get a refund. And you can tell. You just have to know your situation, okay? If you form a business, like an LLC, if your band decides to become an LLC, an S Corp, or an S Corp, you will also get a K-1 form. I don't know if any of you guys have ever received a K-1 form. But that's basically if your band forms a business entity, then your band members or whoever's involved in the LLC will get a K-1 form. So you could possibly have a 1099, a W-2, and a K-1 form. And basically you just take all those and you file your taxes with it. So you just don't want to miss any of the forms because it's a huge pain in the ass to try to like amend or return or find your forms, and just always make sure they have your correct address, okay? We'll talk about getting into the business entities in a little bit, but that's I just kind of wanted to keep it simple today. We should get you guys food. Yeah, there's a lot of bands. The majority of bands that I work with, we have them set up as an S Corp. It's a step below a corporation, but what that business entity does is that it eliminates the majority of your self-employment tax. So when you guys go to file your taxes at the end of the year and you all of a sudden owe a lot, most people freak out when they have a big tax bill. But if you can change your band to an S Corp or an LLC, you could possibly eliminate that self-employment tax that you're paying at the end of the year. So, if your band is doing decent, you guys are showing a profit at the end of the year, and you're not spending more than you made, it could be a really good decision to form a business entity. There's obviously, really specific things that come with that you want to talk to your tax preparer about, but it's a really good option for some people because most people can't pay those big tax liabilities at the end of the year, and it goes into the next year and it just ends up hurting people, and people get on payment plans because of it, and it just, so the goal is to be able to pay everything that you owe in that tax year. But that's really hard. It's really hard for most people. So, and it's hard for me too, honestly, just being a single self-employed person. So, if you guys ever think about doing a higher up business entity, like it's a good decision. If you can stick with it, because it's more rules that you have to pay attention to, And like a business tax return is due March 15th, and like most people think they're due April 15th with everybody else's taxes. So when all those businesses don't file on March 15th, the penalties become pretty huge. So there's just a little more things when you become a business that you have to pay attention to.
Is that what you do? Do you do it by March 15th? Or are you taking
like
on
me.
S Corps?
If you are an S Corp or an LLC, you have a partnership LLC, not a single member.
Okay.
Single member LLCs are definitely different. Single member LLCs, you're taxed exactly the same way as a self-employed person. So if you guys ever hear of somebody saying, hey, just set yourself up as an LLC, just know that if you're just one person, your tax situation is not going to change. You're going to get the protection that an LLC will bring you in case somebody comes after you, but you're still going to get all that self-employment tax at the end of the year. So,
and that's
gotta
probably
pay
what the
attention to your
majority
deductions.
of us are too.
What's that?
Or that's probably what the majority of like us would be, right?
Yeah.
Or you would
Well, most people just are. Yeah, most people are just sole proprietors, and they really don't set themselves up as anything. So the thing that I see is the continuous, I owe so much at the end of the year, like I can't pay that bill, or just freaking out, like, holy crap, I didn't know I was going to owe that much. So that's always, if you don't really keep track of your deductions, that's always going to be the case, So, but then if you're continuously owing like that at the end of the year, you want to change your tax situation. You want to form something else, because you can be a single member S Corp. So you want, if you're really getting killed on self-employment tax continuously, you want to change your tax situation. So just talk to somebody about it and see what the best situation is for you, Okay, so going into the deductions, your guys' write-offs is pretty much the most important thing that you're going to want to pay attention to on a monthly basis, okay? And that's the sheet that I gave you guys. I'm just going to go over it. So, not much has changed with the tax reform and these deductions, so these are pretty much all, good to go. The main thing that changed was the meals and entertainment expense. So now moving forward, you can only write off business meals, okay? You can't write off the entertainment part of that expense. So no more taking people out to shows, like concert tickets, Avs games, whatever. You can only do strictly business meals, okay?
Can you do concert tickets?
If you're going there to research something, yes. But if you're taking her there, kind of as a business thing, no. No more concert tickets, unfortunately. I think people were majorly pushing that category. I mean, I have some clients who their meals and entertainment category was like 25 grand. I'm like, you guys are spending way too much on meals and entertainment. So it's kind of like that gray category that the IRS is like, all right, what are you guys really doing? So they eliminated the entertainment part. So just know that it can be strictly meals, okay? All right, so let's just go down this. Basically, anything that you guys are using in your daily life to make your business run, you're gonna wanna write that off. Anything you could possibly think of, okay? If you're traveling for auditions, any business meetings, anytime you're looking for work, and that means if you're advertising yourself or you're sitting at your computer having to job seek and all that, that's a job. Looking for a job is a job in itself. So whatever expenses you incur to look for a job, write that off. Your parking fees and tolls, your gas, all car repairs, those can add up pretty quickly. If you guys get new brakes, new tires, you can definitely write that off. Car washes, Ubers, Lyfts, whatever you're doing to get to your gig or your practice or your audition, everything, write it off, okay? Keep track of it, really. There's some apps out there that QuickBooks has an app for self-employed people. I don't necessarily trust apps that much. I feel like some people have lost their information on it, but that's kind of a good way to also keep track of everything. Somewhat easier. Like when I came here, I'm writing off my airfare, writing off my Ubers, taxis, all public transportation. I rented a car, I'm writing that off. Yeah. My hotels, I'm writing that off. Lodging. Going down to office, all your postage, your pens, your paper, your business cards, just everything that you're using, okay? Don't be afraid to write that stuff off, you guys. And this is where the tiny little deductions come in, like pens and paper clips that you might just forget about, So one really good way to make sure you're getting all your expenses is to print out your bank statement every month and just highlight everything that you use for work. Use different highlighters. Blue for meals, yellow for office, pink for advertising. Whatever works best for you. But if you do it on a monthly basis, you guys will not miss out on your deductions, okay? And you want to get all of those, trust me. So whatever you have to do on a monthly basis to keep track of your expenses, whatever's going to work for you, that's definitely what you want to keep doing.
If you got audited though, how would do you have to prove that Uber was for business? Or did they really go that deep?
And those are kind of the fine lines, oh yeah, you could have just been for personal, but you kind of have to make it into a business expense, Just like your meals, you want to make your business meal, you want to make all of your meals into a business meal, okay? When you're out, anywhere eating, make that a business meal. I say my best tip is to take your business card and to give it to the bartender or whoever if you're sitting at the bar or anything. So that's proof right there that you were there, you know. That's a paper trail that you were there eating. But the reality is that you guys are artists and you're always going to be talking about your work. So when you're with a friend, you're with your parents, whoever, if you're at that meal, you're most likely talking about your work or your job or something. So that automatically makes it a business meal, okay? And so, but really, if you're out, Chipotle, like any of those places, I mean, it can be a business meal. So you want to make it into one, okay? That's like the shadiest thing I'm going to say ever. That's like the worst thing I'm going to say, but I've been giving that advice for 10 years and I've never got anybody audited. Like, you know, it's just one category that you can, you know, make it into.
How would you go about writing off a meal like this where you have to pay cash?
Save your cash receipt. Save all of your cash receipts. That's way more important than using your card because you have the bank statement, you know, so. With the cash receipts, when I forget it personally, I'm like, oh shoot, I forgot to get a receipt. I'll just go home and write it on a sticky with the price and the date, and that's good enough for me, you know? So, cash receipts, super important.
I have a question.
Okay, yes.
Just to clarify, these deductions are for like if you've incorporated in some sort of way?
No, this is for you as a self-employed.
Okay.
This is all strictly self-employed 1099 people.
Nice.
Yeah. And these are still the same deductions when you have an LLC or an S corp. They're all kind of the same deductions. It's just taxed differently, you know.
And so the LLC offers you like this further protection.
Protection, yeah. There's a bunch of different kinds of LLCs, so it gets kind of confusing. But for you would either form a single member. Or if you met somebody and wanted to have a business with them, you guys would be a partnership, you know. But that's a whole other thing too. Be careful who you're partners with. Be careful who you get into business with. That's a hard one too. Okay, let me just keep going down this list. I think people who live together, they ask me, hey, what portion of my internet can I write off? What portion of my utilities can I write off? And I just say the whole thing. Like, whatever you're paying for internet, write off the entire amount, you know? If you have to split it with somebody, just write off the amount that you pay, okay? Let's see here. Sorry, these are kind of all over the place. Professional photos, your resume if you're putting one together. I don't know if any of you guys are doing video or film or movie work. That kind of ties into this stuff too as an artist in the entertainment business. Any fees you're paying a manager. If you're paying anybody anything, you want to keep track of that, okay? Because that's where the 1099s come in. So anybody you're paying $600 or more to for the entire year, you're going to have to 1099. So, you know, your managers or tour managers, anybody who's doing a website for you, promotional work, they're all going to get a 1099. So somehow you got to keep track of how much you pay them. Same with me as an accountant. When people pay me to do taxes, if you guys pay me to do bookkeeping or anything like that, you know, you're going to definitely write that off. Any interest you guys have, this is actually a good one. If any of you guys have a loan out on a car, you cannot write off that loan. You can only write off the interest on that loan, okay? So any interest you guys pay, you can write off. But the car one's usually confusing. Most people think they can write off their car loan, but they can't. Okay. Legal fees and professional fees, you guys can definitely write off. All of your merchant account fees, if you use, this is actually one that most people forget too, is if you use PayPal, what else has merchant fees, you guys? I can't think of it right now. PayPal, What's that?
Venmo?
Oh, Venmo. Yeah, Venmo. How else do we get paid? Sorry, I'm blanking out on this. But whatever those 3.75% fees that you pay, write all those off too.
Even
and,
like Kickstarter, Patreon, or something.
Kickstarter is kind of a different thing, Let's talk about that. Can you remind me to talk about that though? Okay. But no, mostly just from like PayPal or something like that. And you can like get into your PayPal account and see how much you paid in fees for the whole year. So
even like credit card debt. Can you write that one?
Not credit card. Mm-mm.
Or credit card fees, like if you do the Square.
Oh, Square, that's the other one I couldn't think of. Absolutely, yes.
Or brown paper tickets or anything that takes a fee for.
Exactly, yeah. Yep, all those fees are definitely deductible.
So good to know.
Some of those add up too. I mean, I have clients that do a lot in sales, and those merchant fees they're in the thousands, so.
Especially for shows too, like buying tickets
for
online.
Brown paper tickets.
Like half the
Oh, are
ticket.
they a lot? They're so cheap. Yeah, that sucks. Same with your bank fees, you guys. If you are overdrafting your account sometimes, it happens. Whatever your monthly fee. I know, we all overdraft our account. It happens. I'm not perfect either. The bank fees, like if you have a monthly, $12, $10 monthly bank fee, definitely get all those in there. What's that? Oh yeah, absolutely. And then if you overdraw your account, you usually get like a $34 fee. So definitely those too. Yeah. Membership costs, if you guys are a part of, and if you have a magazine you subscribe to, if you go to the art museum to get influence, any type of membership cost that's related to what you're doing, you can write off. And the event costs it's kind of a gray area. If you are going to a show to, look at the lighting and see what's new in the stage design and all of that, you can write that off as research and development or continuing education. Don't go overboard. Don't just go to a ton of shows and just write off all those tickets. Like, that's not okay. But if you're really there to network and, do what you got to do for your business, definitely write off any event costs like that, okay? This is really kind of all over the place. Going down to equipment and office, basically any cables, and I don't know what specific types of musicians you guys are, but anything you're using, picks, pedals, whatever you have to buy for yourself, you can definitely write that off. If it's a higher cost item, you might have to depreciate it. So if you bought something for, if you bought a guitar for $5,000, tell your tax preparer, keep that one separate, okay? Because they're probably going to have to depreciate it, okay? Which means that you can take a little bit of the cost in that tax year, and then you're going to move that cost forward so you can get that expense in tax years moving forward. So you just don't take the full deduction in that year, but it'll help you moving forward. With anything with a laptop, if you buy a laptop that's super expensive, same thing. Stereo system, like anything that's expensive, you depreciate over time. So just kind of set those expenses aside just to know that you're not going to be able to take the full deduction, okay? And that's mostly with like gear and stuff like that.
I have a question.
Mm-hmm.
This was a little bit back, but if I were to go to a coffee shop and be working on my business there on my laptop, would those would that count as a business?
Absolutely. I would even do that meal, Yeah. The gas to get there, the parking. You had to buy a pen. Like everything. Yeah. Being self-employed is kind of a write-off heaven. You just have to be careful, You just can't go overboard. I'm pretty good at looking at tax returns and knowing what looks suspicious. I've never gotten anybody audited in the entire time I've been doing this, so I'm really careful about that. But when I hear people getting audited, I'm like, oh, especially these cannabis businesses, I'm like, oh, they're done. You know? Well, the cannabis business is a whole other story, but yeah, I mean, it just creates so much stress and anxiety, you know, and you don't want to go through an audit, so why not take the steps to not even risk that, you know? But, you know, that's where the expenses come in. That's what they look at, is if the expenses look strange. And if you can't show a loss more than 3 out of 5 years. So eventually, you as a self-employed musician, you're eventually going to have to show a profit. Or the IRS is going to consider you a hobby after 5 years. You can Andy, you can prove to the IRS that you're not just doing it as a hobby. So if that ever happened to one of you guys, you're just continuously spending way more than you made, and you just can't get ahead. You can't show a profit out of 5 years. You can prove to the IRS that you have been working on your, you know, you've been doing everything you can, and you're not going to get in trouble. But that's kind of the rule, is that you don't want to go overboard on your expenses because you don't want to keep showing a loss. You know, you eventually do want to show a small profit, okay? So a lot of people just have this idea in their mind that they don't want to owe, so they want to show a loss. But that's not always a good idea, you know? I mean, you definitely want to count all your expenses, for sure. And if you have a loss, it's okay. You can have a $100,000 loss. That's okay. But you can't have that more than 3 out of 5 years. So, you know, it would come down to you. Like, if you've shown a loss for the past 3 years, your next upcoming tax return, you want to show a profit, you know?
What's that number for the small profit? Is it like a certain number, or is it just individualized?
It's just super individual. Like, it doesn't matter how big or small a profit you have. You can show $1 as a profit and you'll be fine. You showed a profit for that year because you had $1 profit.
Wow.
It doesn't matter what the number is, yeah. Just as long as you're not continuously showing a loss.
And a profit just means how
You
much money
made-
you made
you
versus
didn't-
how much you spent.
Yeah,
and
you
there's
didn't
more-
spend more than you made, which is super easy to do. And I feel like majority of people who are self-employed and their first year in business, being a self-employed, whatever you're trying to be, most people have a loss, and most people spend way more in that first year than they made. And that's the typical business thing, to have a loss for 3 years, which is why they give you 3 out of 5 years. So that's something to just be conscious about. I just have this thing where I know a lot of people are they try so hard to write off so many expenses. I'm like, dude, you just can't keep doing that, you know? I'm like, where are you getting these expenses from? Like, I didn't see those on your bank statement. So people try to get away with a lot of stuff. Same with people trying to claim kids that are not theirs. When I used to work at Liberty Tags, we had some people come in that, yeah, fake socials. Like, you don't have 7 kids. We know you don't have 7 kids. So it gets weird, you know. People try to push things and get those refunds. Yeah, there's a thing with like foster kids too. If you can have a bunch of foster children, and you get really good tax benefits for having foster children. So people do that, and they get like 6 foster children. They don't take care of them, but they get thousands of dollars, you know, from taxes. So there's a lot of weird ways when people push the system, you know. So I just always try to be really careful, and especially with all your expenses, you know, just not going overboard. I think it's kind of easy to go overboard if you're making an album. If you're trying to produce a record or something like that, your expenses are going to be pretty high. So I feel like those are the years that I see most musicians losing out on, is the year that they have to make an album. So those expenses, those recording studio, the time in the recording studio, all that totally adds up. So those might be the years that you're going to show a big loss, you know, and that's okay. You can have a profit for 2 years and then show a loss for 2 years and then go back to having a profit. Every year as a self-employed individual is going to be different. You know, it usually will be, because people's lives change every day. You know, you could get married, you could have a kid, you could get divorced. Like, that's all going to change your situation, you know? And I don't know, I've just seen a lot of stuff happen to people where they lose track of what's going on in their lives because stuff happens and you get sick and health issues and whatnot, and, you know, so every day is different, I feel like, in the tax world. So, if, you know, if you can stay on top of your stuff on a monthly basis, that's, you know, you're basically gonna come out on top. But that's the hard part. So keeping track of all the expenses, it's tedious. It really is. All right, I'm just gonna keep going down here, and I like that you guys are asking questions. So keep asking questions. It's good. Oh wait, sorry. Hold on one second.
I was going to say something regarding expenses that you inspired this is getting a bank account or a card that you use exclusively for.
Yes.
Like a business card.
Exactly. If you have a business card that's just for your business, that's going to be super easy for you to go into that bank statement and see, you're like, oh, that's all my business expenses, my other card is personal.
Yeah, like it looks like really overwhelming because there's so much stuff.
Yeah.
But if you just do it, Andy said, just get like a business card and just put everything on it.
And then at the end of the month, just look over. Exactly.
And all my income goes in that same account.
Nice. Yeah.
That'll mix my personal account with the.
Yeah, I mean, you have to have an entity to set up a business account, you know? So you really have to form something, a single member LLC, whatever you want to set up to be able to, what's that?
Secretary of State, or,
Yeah, it is Secretary of State.
I got a DBA, or it's called
Your DBA.
something else. It's not DBA in Colorado. I have a business entity name.
Your EIN?
No, that's
Andy Art Music?
No, I can't remember the name of Colorado calls it, but
Oh, just let me know when
it's
you
like a
can
trade
do it.
name.
Did you just set it up through the state?
Yes.
Okay.
Yeah, you can go to the
Okay.
Secretary of State.
So, okay, well that was probably way cheaper
Sorry.
than LegalZoom or anything like that too. So,
Oh, yeah.
So you can email me if you have questions, but yes, like Andy is saying, a good idea is to set up a business bank account that's separate than your personal. So you just know all of the business income is coming into that business account and all the expenses going out are business. And then you can take what are called owner's draws, and you can just transfer money from your business account to your personal account to use for personal use, you know. So your personal will always have money in it if you need it, but the majority is going through the business. So that's definitely another step.
An extra question.
Uh-huh.
So do I have to state at all if I'm like if I haven't incorporated and I'm just doing it through my personal accounts, do I have to state anything or?
No,
Okay.
no. It's okay to have just a personal account. That's just more work for you to figure out what is a personal expense and what's a business expense. So you'll just have to take more time, you know?
Yeah, so I would just tell
But
if
that's
I-
probably easy for you. Like,
Yeah.
I mean, when I had a personal account, it was pretty easy for me to see what was business and what was personal, you know? Okay. Let's see
And
here.
then when we're filing, do we put that like just as our personal deductions, or is there like a space for like business deductions?
You would fill out a Schedule C, which is what everybody pretty much is, as a self-employed person, fills out. It's your Schedule C is a profit and loss report. Basically, you're just going to show how much income you made, and then the tax software, you're just going to put all of your expenses into the categories.
Cool.
And then it'll like come out on the tax return in the right place.
Sweet.
But yeah, you shouldn't have to like worry about that, you know.
Cool.
But I'm kind of assuming all your guys' tax situation's kind of the same right now. Mostly 1099s, maybe a W-2. Yeah, most people are in that realm. and seriously, you guys, if you have any questions after this, just don't hesitate to email me or text me or whatever. Like, I'm always available for advice. So it's a lot of information and it's easy to forget. So don't worry about asking questions ever. Okay, we kind of talked about this. Any tools that you use, software, your computers, your phone, a tablet if you buy it. Yeah, those phones are expensive these days too. So if you buy a really expensive iPhone, you might want to depreciate that too. So cameras, video equipment, printers, monitors, anything you use for your office, definitely write off. If you guys bought a car, a lot of bands, most bands rent vans, I feel like, for tour and stuff, but some people do end up buying a vehicle for the band. That gets a little confusing. Like, who's going to write off the band van on which taxes? So my best advice is if you guys go down that route and buy a really, an asset like that, is to just keep all the paperwork and give it to your tax preparer at the end of the year. But you can definitely get a deduction for whatever vehicle you bought. And if you buy one personally, you get to depreciate that vehicle over time. So that's a pretty good deduction. It's some of those deductions are pretty high. So don't miss out on that if you get a vehicle. And the same as if you have a vehicle and you sold it, you might be taxed on the amount that you made on selling it. So it's the opposite too. So if you have a vehicle that you sold, make sure you keep all the paperwork for that too. Okay, let's see here. And really whatever is specific to whatever music you guys are doing, whatever instrument you're playing. If you're a saxophone player, whatever you buy is obviously going to be super different than a guitar player. So, whatever you guys have that's super specific to your career, you want to write off. Same goes for any repairs and maintenance. Any repairs and maintenance on your car, any repairs and maintenance on your computer, phone, instruments, all that. That's all deductible. Let's see here. I put dance training. If any of you guys are backup dancers. No, I'm just kidding. Oh, yeah, you're a dancer? Yeah, music lessons, anything that's furthering your career, you want to write off. I know a lot of musicians that still take lessons, which I think is great. I think we all still need them. I play violin too, so I know how important lessons are. I never would have gone anywhere without them. Voice training, and that's kind of the same with research and development. Research and development is kind of a broad category. So anything that you're using to further your career, write that off. If you have to buy a book, sheet music, anything like that. Paying somebody to help you in any way. Okay, we're almost done with the deductions, you guys. Insurance, there's a bunch of different kinds of insurance you can write off. The big one that people forget is car insurance. So definitely write off your car insurance. All of it. No, don't do any business percentage, just write all of it off, okay? Same with travel, equipment, business insurance. I'm sure I'm forgetting something, but all of that's deductible. We went over the meals. You guys just know it's strictly business meals now, no entertainment. Let me talk about business gifts for a second. This is kind of a really confusing category. The IRS only allows you to give a gift of $25 per person. Like, I've had clients who their business gift categories were so high. I'm like, no, you guys, we're going to get in trouble because that's not $25 per person. You didn't give that many gifts out. So
Per year, $25
per year.
per person?
Yes. So only $25 per person is allowed. Yeah. So you can give 10 gifts to people and write all that off, but If that number is super high, it's going to be a red flag.
What's high?
In the thousands. Hundreds are okay. That's pretty normal, you know. I mean, I don't know. I guess I think about like my personal life. Like I don't really give that many gifts out. I'm an asshole. No, but I just can't. Like I don't know. I'm just not in the spot to be continuously giving people gifts. So, but you know, there's companies that they have enough money or they can do that. So, you know, it's obviously different per person, but that's just a category that's a red flag. So. The home office deduction is another huge red flag, okay? Here's the thing about the home office deduction. If you have a W-2 and a 1099, technically you're not supposed to take the home office deduction because that means you're out at a job during the day, which means you're not supposed to take the home office deduction because you're not at home working, okay? So it's kind of a fine line. You just want to be careful with that. If you are 100% 1099 self-employed, you can take that home office deduction, which definitely helps people. You have to figure out the square footage of your home office compared to the square footage of the entire house. So you have to find those numbers. Most people kind of fudge them, but it could be on your lease or something. That's kind of how they figure it out. There's a couple different ways to figure out the home office deduction, but that's the majority of what people do is they figure out the square footage of their home office. But that's just one category that the IRS looks at immediately if you have a W-2, okay?
What if it's a small W-2?
That's more of you can get away with it. If you didn't make very many wages, they'll be like, oh, he spent the majority of his time at home. That makes you a statutory employee, so you can get away with it. You can absolutely get the home office deduction with both. It's just risky, you know? So just want people to be careful about that.
If you have another W-2, you have to do the square footage of your home office. If you are 100% self-employed.
If you're 100% self-employed, you want to figure out the square footage.
Still, okay.
Yeah. But, well, still with the W-2, too. Yeah.
Okay.
It's the same situation. It's just, the IRS just looks at it differently because you're away from your home and your home. So it's confusing to them. Like, how much time did you actually spend away from home? Why are you trying to take the home office deduction, you know? Because most people that take the home office deduction are just strictly working from home.
So just the space where you would do anything for your business, like wherever my desk is? Or
yeah, and that's kind of like the tricky part. Like a lot of people just don't have a home office, so they'll just like, yeah. You just gotta like try to think of whatever square footage your space is, yeah. But that deduction really helps. It's a great one. It really does help. And I always kind of leave it to last. Like if I'm just doing a tax return, that's like the last deduction I'll put in. I'll see where they're at before the home office deduction, and then we'll talk about it. I'm like, all right, do you want to write off the home office deduction? Should we get what you're owing a little bit lower, you know? So some people don't want to write it off because it's a huge red flag. That's like one of the #1 red flags from the IRS is that deduction. So, like my mom, she's been an S corp. She's been self-employed for 50 years now. She's never taken the home office deduction. I have personally, but she never wanted to risk it, so she just never took it. You know, so everybody's different, but.
So I'm curious. I have a full-time job.
Okay.
And I started about a year now. I've been doing voiceover work.
Oh, cool. Okay.
In my house, so I don't do voiceover work at my job.
Right.
So
It's just at home.
yeah, how is that?
What's your day job? Is
I work
it?
for the Denver Public Library.
Oh. But you're just doing the voiceover stuff at home.
Yes.
Okay. You would be at risk to get the home office deduction. You would be the red flag. It would be risky for you to take the home office deduction. That's what I mean by that. Because the majority of your work is not at home.
Correct.
So.
But they don't it seems like they're assuming I'm doing the same work wherever I'm at.
Yeah. Well, it really comes down to just having that W-2. If the majority of your wages are on that W-2, they're going to know that you're not working that many hours compared to that W-2 job at home, you know? And so that's kind of where the home office deduction comes in. They're like, okay, the majority of his hours are away from home. That's how they look at it, really. It doesn't matter what you're doing. You could be doing the voiceover stuff at that W-2 job also. Doesn't matter. Because you have that W-2 away from home, that's kind of the threshold.
So yeah, like, I mean, I feel like I've got a lot of questions. Because this is the first year I've gotten a lot of self-employment income.
Okay.
And I don't...
You want to pay attention to your deductions, really.
So
that's what you're doing.
my understanding is it's either the standard deduction or itemized, right?
That's a good question. That's a really good
like,
question.
right?
Most people take the standard deduction. You can only itemize on a tax return if you have a home mortgage or a ton of medical bills or a bunch of charitable donations. That's the only way you can really itemize your deductions.
Okay, well, where do these deductions?
These are just your regular self-employment deductions that are going on your Schedule C profit and loss
Schedule
report
C.
from being a 1099.
So I can do this. So I can do like all the W-2 stuff, right?
Okay.
And that's. But then I take the standard deduction and then
Yep.
do all this on Schedule C.
Exactly.
Oh, okay.
Exactly.
All right.
Totally right.
It's
It's confusing, I know. The standard deduction and the itemized deductions confuses most people.
Right.
Yeah, but the itemized is only for people that have a home or a
Okay.
ton of medical bills for that year.
So there's really no. Okay, so I was always thinking of like my.
You're thinking
all my
itemized in a different way.
Well, I'm thinking of like all my expenses have to add up to a certain amount for it to be worth it to me to
No.
even list them, right? So I'm just going to be doing this anyway on Schedule C.
Absolutely. You're just going to be listing all those expenses no matter what, no matter how much they are.
Do you happen to know anything about Upwork or Fiverr, how to list that income? They're freelance websites.
I can help you with that after this.
Yeah.
Yeah, we'll talk about
Okay.
that. Yeah. Okay, let's just keep going here. Payroll. If you guys set up an entity, an LLC or an S Corp, and you decide that you want your band members to be on payroll, that's kind of a whole different story. I don't see it much in the music industry. The only people I've really seen be on payroll and get a W-2 is somebody that tours around with like Bass Nectar. He had all of his people that he hired on payroll. That was like one person in a year in the music industry that I had on payroll. John Mayer, I do one of John Mayer's guys. He has all of his employees, anybody that works for him, on payroll. So you can choose to have your band members on payroll, but then you have to pay all the payroll expenses on a monthly basis. So it's kind of up to you and your band how you guys want to be set up. You know, if your band members want a W-2, they want money withheld from their paychecks every 2 weeks, and that's how you guys want to pay each other, you can set it up that way. It's definitely more confusing, but it's an option. Yeah, and you guys just really need to remember that, that just to keep track of the people you're paying out. Whether it's on a spreadsheet, if you're using QuickBooks Online, FreshBooks, anything like that, you just really have to keep track of everybody you're paying out. Because at the end of the year, those people are going to start to ask you, hey, how much did I make from you this year? And you're like, I don't know. So, you know, it's just good to have it done at the end of the year, not be behind on that. So whatever you have to do, you know, whatever makes you comfortable in setting up a spreadsheet, or even if you just keep a notepad and write out how much you pay everybody every month. Even just doing it that way is totally fine, you know? So just as long as you get it down. Okay, we made it through the deductions. And I always just kind of say that it's just a good idea to have this by your desk, you know? Or just out so you can constantly look at it and so it gets in your brain. Yes.
One question about Someone who gives you a W-2 for gigs.
Mm-hmm. Yeah.
So it's not any one location, it's multiple locations. But
Okay.
the money's coming through one entity, and that entity's giving W-2s instead of 1099s.
So they have payroll. Wait, what did you say? Wait, say that again.
You know what? Skip it.
Are you sure? You can ask me later too if you're
Okay.
confused. Okay, sorry, that was confusing. Okay, yes.
Wardrobe for stage.
That's a great. Did I not have that on there? Did I not have stage clothes on there? Okay, that's a great question. Stage clothes is a huge. So many people just think you can write off your normal everyday clothes.
Buy them zippers.
No, you can't write off any clothing, okay? The only clothes you can write off is if it's specific stage clothes. I mean, really specific stage clothes, like you're dressing up on stage for something. Or if it has your logo on it, or your band logo. So if you guys like make sweatshirts or hats or t-shirts and wear that, that's okay. You can deduct that. But not just every day. And that kind of gets tricky because a lot of musicians play wedding gigs. And those tuxes and suits that they have to buy are really expensive. So that's the thing with that, is that if you buy a tux for a wedding gig, you absolutely cannot wear that suit for any other gig. It has to be specifically for weddings only in order to write it off.
Oh, like you can't wear it to the gas
You
station.
can't wear. You just can't wear it to another wedding that's personal. You know.
It has to be just for that one
Just
show.
for. I mean, if you play a gig and wear it at another gig, that's fine.
Okay.
Yeah, but you just can't wear it for. You can't write it off for personal use. So.
What about like makeup or
No
hair?
makeup. If it's like stage makeup, you know, that's okay. But no, like if you get your hair done, no. Super common misconception, actually. Yeah.
Okay.
Like if I actually took the time to really get myself ready today, and I was all dolled up, like no, I wouldn't be able to write off any of that, even though I'm like doing business stuff.
Really?
Yeah.
None of that.
Yeah.
Even if it's like a specific look for a specific show.
That's okay. If it's really specific to that show, and you have to go specifically buy makeup for that show.
Or if you hire someone to come in and do a specific look for a
Yep,
specific
you can.
show.
That person that you hire is absolutely deductible. Yes.
Okay.
Yeah,
So
but
you
just
hire
like normal
someone
clothes.
else to do your makeup.
And then
Then
write it
write
off.
that
Wait, what did you say?
Instead of doing your own makeup, you could just hire someone else to do it
Oh.
and you can write it off.
You can do that. If you want to.
Reed, do you have one of your
But like if I
suits?
wear this jacket today, but then I wear it to a show.
No. Unfortunately. I know, it sucks. Uh-huh.
Do people ever 1099 non-employee contract labor?
That's just really paying people out.
Okay.
That would be like if you hired Reed to do work for you, he's just your 1099 contractor.
Okay.
Yeah. So just keep track of those amounts. So one big confusion that I feel I've talked to people a lot about is business miles versus taking the actual deduction. Here's the thing about that. So the IRS lets you write off either your business miles or the actual expenses of your car. So you want to write off what benefits you more. If you drove a ton for work that year, your miles are probably going to benefit you more than the actual expenses. Okay? But you have to keep track of your miles somehow that you drive. That means from gig to gig, practice, rehearsals. There's apps that keep track of miles now. A lot of people just have like a little logbook in their car and they like look at their mileage from start to finish. But if you're driving a lot for work, those miles might benefit you a lot more. So you get the choice. You get to take the miles or you get to take the actual expenses of the car, which is like the repairs and the gas, the oil changes, the parking, that kind of stuff, the insurance. So more often than not, those expenses benefit people more. because gas is expensive, and repairs are really expensive. So basically you have to keep track of both, which kind of sucks. The IRS doesn't like it when you switch back and forth year to year. So like if you chose miles, you kind of want to have to stick with miles. You can't keep doing just miles and the next year write off the actual expenses and the next year go back to miles. That's a red flag to them. So if you choose miles, you want to stick with it as best you can. Yes?
What if you're kind of going back and forth between using like your car for the miles, but also use rideshare?
It doesn't matter. You still, the rideshare, that would be the expenses. So then you'd have to be like, okay, this is rideshare benefiting me more than driving. Yeah, and it sucks to have to keep track of it all. But
you can write off like Ubers and your own car?
Not the miles though. The miles are totally different than the actual expenses, okay? So if you're Ubering it around and you're using your car, yes, those are all deductible. But if you're just counting your miles, then you're just counting your miles. Not the Uber, not the gas.
So you can't count miles and Ubers?
Exactly. You can either do one or the other. You can do the miles or the actual expenses. So you have to figure out what benefits you more.
And this is any entity, sole proprietor, LLC, anything?
Getting up into the higher entities like a corporation or something gets a little bit different. Yeah.
Okay.
But for you, for now, yeah.
Okay.
Yeah. LLCs can, you can, same thing.
I have a question. If our work, if we get like a refund on miles through our work, would we be ineligible to deduct?
Like if they reimbursed you again? Yeah. Anything you reimburse for, you're not supposed to count.
Okay.
That's part of the new tax reform. One big thing that they changed, which sucks, is if you have a W-2 and your job makes you spend extra expenses driving around or whatever those extra expenses are, you can no longer deduct those as unreimbursed employee expenses. That was something that they just eliminated. So if your employer for your W-2 job is having you drive around, spend your own money, like talk to them, because you can't deduct that anymore. So, but that's super specific to a W-2 job, okay? So, I don't know. I haven't really run into that situation much where people with the W-2 are spending their own money. Most people with the W-2 are like at their job daily, just working that job, not running around. So, but it happens, but definitely my best advice right now, just for anybody because of this tax reform, is to make sure you know where your situation is at if you have a W-2 employer. Check your withholding amounts. Go just talk to HR, whoever you need to talk to, because honestly, with the new tax reform, things are really going to start to change on tax returns. So you have to make sure you're withholding the right amount, because if you're not, you could owe and have an unexpected tax bill. So if you have a W-2, talk to your employer about what your withholding amount is, or where it's at right now, because you want it to be at 0 or 1. Unless you have a family. And I've seen some people claim 4, and they're like, I'm not, their tax situation was just so different than somebody that claims 0. So it really makes a difference. So just talk to your employers about that. There's a really big misconception with donations. I think that most people tell people when they're donating to them that it's a deductible. Like, oh, you're donating to us. That's a write-off. That's a tax write-off. I see that all the time. I'm like, no, it's not. Because you can only write off your donations if you itemize your deductions like we were talking about. So the only people whose donations are really going to count is if you have a home or if you have a ton of medical bills. So if you want to give $100 to a music association or something, they're like, hey, this is a tax write-off. It's not. Don't include it in your deductions, okay? Unless you had thousands of dollars in those donations, it's not going to count, okay? So most often, donations do not count.
So if I'm renting a home and I drop off half my clothes at Goodwill, that doesn't count.
If you itemize your deductions, you can count those donations, but it has to be more than the standard deduction, which just got raised to $12,000. So your donations have to be more than 12 grand for it to even count.
Okay.
Yeah.
Is that the same for like, what if you're like playing the benefit show or something?
Same thing. Well, that's a little bit of a different situation.
If like you're doing the...
You're putting on the benefit?
Or whatever. Yeah.
Right. That's a totally different situation, yeah. You want to count the money that people are giving you, but yeah. It's really, I'm really just talking about the money that you're donating to people
Right.
out, yeah. Just everybody thinks it counts, but it doesn't. And so they put it on their, list of deductions for me, and then, their profit is different. I'm like, it's because we didn't count your deductions. So they're like, oh, shoot, now I'm going to owe more. So don't count that in your list when you're putting everything together. Health insurance, this was kind of a confusing one the past few years. And Obamacare, the ACA Act. 2018 is the last year of the penalty. So when we go to file upcoming 2018 taxes, if you are not fully covered all year for health insurance, you can still get that penalty. Okay?
Is there like a little bit of you can be unemployed, whatever, without health insurance for like 2 or 3 months? And they won't pay the penalty, is it every single month?
That's the problem with the tax software, is that they calculate it every single month. So I literally have to go in and either check the box that you were covered all 12 months, or if you weren't covered all 12 months, I just have to click the boxes of the months you were covered. So if you weren't covered for 3 months, you would get a small penalty for 3 months.
That's too bad because a lot of jobs, there's like a 90-day.
Yeah, you might be able to talk to them about that, but it really comes down to that 1095 form that everybody should be getting in the mail. If you had health insurance, you should have gotten a 1095 form. The problem is that so many people's addresses were not correct in their health insurance that so many people don't get those 1095 forms and they file without them. And they have to go back and amend their return because they didn't do anything with the health insurance. So 2018 is the last year. You guys are going to have to deal with this. Trump didn't like the penalty, so he got rid of it, which is nice. I don't think you should have a penalty for not having health insurance. That's stupid. But that's what they did. So, so 2018 is the last year. So you definitely want to, if you were covered all year, you definitely have to make sure that you check that box on that return so you don't get that penalty. But if you have kids and those kids aren't covered, I've seen those penalties be in the thousands just for not having health insurance because your kids weren't covered and you weren't either. So it really adds up for some people with higher incomes. So I'm glad that's being eliminated, but one more year, guys. One more tax season with that. So make sure you get those 1095 forms. If you had health insurance, get that 1095 form. Don't forget about that. You can go online in your health insurance online account. It should be in the tax documents section if you can't get a hold of the insurance provider. So, one thing that I get asked a lot about is if people should file or not file if they're under a certain income limit. Oh geez, I forget the amount. I should have written it down for this year. I think it was like 12 grand last year. So if you made 12 grand and that's it for the entire year or less, technically you didn't have to file a tax return. Okay? So my best advice is to always file no matter what. I don't feel like that does anybody any good, just skipping a tax year just because they didn't make enough income, you know? I just feel like everybody should file every single year no matter what, just to stay on track, you know? It gets confusing and stuff happens. I don't know, the IRS isn't perfect either and they make mistakes too. So I just feel like just because you don't have to file doesn't mean you shouldn't. And those are kind of the times where you might get a refund back, is when you didn't make that much. The Earned Income Credit is the largest anti-poverty program that the United States has for helping people, for helping lower income families. And so a lot of people, when they file their tax returns, they get the Earned Income Credit, which helps them get a refund back. And you can possibly get that. If you didn't make that much one year, that's a good incentive to file because you might get a refund back, just surprisingly, just because you didn't make that much. So that does happen too. So it's kind of another incentive to file. Just kind of what I've been saying, like, the best thing that you guys can possibly do for yourself is to do this on a monthly basis. And I personally like QuickBooks Online for doing your bookkeeping. It does get a little confusing. So most people I work with use a spreadsheet, Microsoft Office, like Excel, whatever they have to use. But that's the best way that you are going to not only stay organized, but if you do it on a monthly basis, you're not going to lose out on important deductions because you're not going to forget. Because when you get to the end of the year, you forget so much that you spent, you know, especially cash or anything. So if you can get your information into QuickBooks somehow, and you can spit out that profit and loss report at the end of the month, you can tell a lot of things about yourself and about your company. And I feel like those are the people that are succeeding more, is the people who look at it on a monthly basis, because you can start to gauge how much you're going to owe in taxes, or if you're going to owe it all, you know, so you can start to save at the beginning of the year, so at the end of the year you're not freaking out over some huge tax bill. Making quarterly estimated payments is always a good idea too. You can really make those at any time. If you feel like you might owe at the end of the year, why not make a payment halfway throughout the year? So that bill at the end of the year is not going to be bad, you know, that bad. I guess I see a lot of people when they actually have money in their account, if they get just a little bit, like a lump sum for some reason, then they'll just like make an estimated payment, get it over with, you know. It's hard. It's a hard thing for people to do, you know. I spent many years not doing that and not caring really. Just like, oh, I'm just going to pay my bill at the end of the year, but it starts to add up, and then when you can't pay that bill, you're like, okay, got to do this differently. So I just feel like if you can somehow keep track of it monthly and just dedicate yourself to doing that, you know, you will be a lot further ahead than other self-employed people. But telling people to do that is really hard. Okay, what else here? With the new tax reform, there is a new deduction called the qualified business income deduction. I would write that down, you guys, because most of you guys are probably going to qualify it. So talk to your tax preparer. Whoever is doing your taxes, make sure they're going to give you that 20% qualified business income deduction. It's a brand new thing with the tax reform, but basically you get to deduct 20% off of your income just for being self-employed. So it's going to help people. So talk to your tax preparer and make sure they get that in your tax return, okay? One new thing with the tax reform is that you cannot, if you have a loss and you spent more than you made, you can no longer carry back those losses, which is actually kind of a big deal. We've always been able to do that, which means that if you had a tax return in a previous year and you felt like maybe you messed up or you didn't get all your deductions in and you owed a lot in those years. Like, you can take 2018 taxes if you had a loss and apply that to the past 2 years and change those returns. But we can't do that anymore moving forward. You can carry your loss forward to a tax year moving forward, so you can still do that. So if you have a loss for 2018, you spent more than you made, you can carry that loss into 2019 taxes. So you'll get a deduction on that. So that'll help you moving forward. But we can no longer go back anymore. So that's kind of a big thing with the reform, is that nobody can change their previous tax returns now because of that. So now all of the tax returns just need to be exactly right, because you can't change them anymore. So it's kind of stupid. I don't know why. I don't agree with all this stuff either, Yes.
So what does that mean exactly, that you can carry your loss for 2018 into 2019? Is it like you kind of get a break on 2019 if you showed a loss on 18?
Exactly what it is.
Okay.
Yeah. If you say you had a $10,000 loss for 2018, you could only claim $6,000 of it. So that's cool. Like, you got your $6,000 loss on 2018, but then $4,000 of that's going to move forward. So then 2019, you get to deduct $4,000 from your income, from your taxable income in 2019. So that'll reduce your income in 2019, which will help,
They have a cap on how much of a loss you can claim per year.
That's actually new this year too. They changed that too, so yeah.
Okay.
And that's the same with depreciation. If you buy an item that's really high cost, you can only take a certain amount of that deduction in 2018, and the rest you can carry forward. So it's kind of cool. So you can kind of be like, all right, 2019, I have some deductions coming that I wasn't, I didn't know I was going to have, So it's kind of nice to be able to, gauge it that way. Are we over on time, or?
No, we're good.
We're good? Okay, cool.
She just has to step off.
But honestly, if you guys are confused just because I'm kind of flying through this stuff, I'm always here for questions. Seriously, you can just email me. It's a lot to take in. I mean, you guys are doing really awesome. I really appreciate the questions.
Really appreciate you. I'm like, oh my goodness.
Yeah. Good. Well, I hope some of it helped at least. There's just a lot of little things that you can do as a business to help yourself out. With the new tax reform, they lowered the corporate tax rate to 21% now. So it might benefit you to change your S Corp to a C Corp. That 21% tax rate it is going to help people now. So obviously, I think a lot of people are up in arms because all the corporations don't have to pay as much tax now, which is unfair. But if you yourself want to be a business and want to be a corporation, that really might save you a lot of money per year in doing taxes. So if you're starting to make money, just look at your tax situation. Talk to somebody about it, Ask questions. Ask as many questions as possible.
Or if I make very little money.
Don't change your situation. It's always good to start off simple. Why do I have this? I had this trick. It's called KISS. Keep it simple to start. And that, just don't get ahead of yourself, Don't think about an LLC until you're really ready.
Yeah.
Because you're just going to have all those extra expenses.
So even if let's say I don't make a lot of money on my art, I can still do this personally.
I mean, but your art's your business, right?
Yeah.
Yeah, so you get to deduct all that stuff for yourself. Yeah, absolutely. Sorry.
I have a question about grant money.
Okay.
For Reed and I applied for a couple grants that were waiting to find out about.
Uh-huh.
And how does that work with whose income that counts as and how it's taxed?
Because you guys did it together?
Yeah.
That's a good question, because that kind of is in the same lines of who puts the band taxes on their tax return? I feel like that's kind of the same question. I don't know. You guys either are going to have to split it, or did you use one of your socials? Like, did you use a social and not him?
Yeah, like in the past when we got the grant from Yowolf, I just put it all into my account, and then I just wrote it off from my account.
Yeah, and that's honestly kind of between you two. You know, what you want to figure out. Yeah. It's kind of the same as when two people have a home mortgage. Who puts that on their tax return? And really, you just split it down the middle. That's basically the easiest way to do it. So whatever, I mean, if you guys have questions, just ask me. But, you know, if you use your personal information, it's obviously going to go right to you. Because any forms are going to go right to your social, you know. So the IRS is going to assume that you're going to be the one claiming it, if your social is tied to anything. But if that's not a fair situation to you, then you can do it differently, you know. And you can do it differently. Like, you might have to call the IRS and ask them, like, hey, look, like, you know, just want you to know that this was my share, you know, and that was his share on his return. So, because IRS might get confused, you know, so it might just be a phone call. They have to explain it to them. You know. But that's the same with band taxes. So, a lot of problems that bands run into is one person, you know, is kind of in control of all the income and expenses, but is that going to go on their personal tax return because the band hasn't set up an entity yet? You know, the band is not its own business yet. So it gets confusing. So, you know, if you have 5 guys in a band, you want to figure out at the beginning of the year who's going to put the band's taxes on their tax return. Because if you put the band's taxes on somebody's tax return, they might owe because of that. So whatever they owe, the entire band's going to have to take the cost of that, you know, and figure out how you guys are each going to split it. So, yeah, I feel like just because it's the beginning of the year now, if you guys are in that situation, you know, if you have multiple people to just talk about it, see what the best situation is. But then if the band forms an LLC, if the band becomes an S Corp or a corporation, then the band files its own tax return. And you guys get that K-1 form to file your own returns with. So that's a whole different situation. That it makes it easier when the band is a business entity. But then you have all those expenses for being an entity. It's, you know, it's not cheap, so.
I was wondering, like, so I have 3 LLCs, but I pretty much use one of them, and I just funnel everything I make through that, but my income comes from like a dozen different places, because it's probably like pretty typical of musicians anyways.
Yes.
But that's fine, right? It's just hard to tell.
Are they all single member LLCs?
What?
Are they all single member LLCs? Yeah.
Yeah, but I pretty much just use one of them and funnel all of my money and expenses through it. Even though the money's coming from like different bands, different like
it's all music though, really, like
pretty much.
Unless you had like something super different, like if you were doing accounting on the side and music, that would be different, you know. But since it's all kind of the same revenue coming through, like don't worry about that.
Cool.
But if you change it up and have a different job, then you're going to want to keep track of that income and expenses completely separate.
Well, one of them's like teaching guitar and piano, and then I also funnel that through the same thing my bands make money through. Is that dangerous?
It's kind of, I mean, no. It's pretty much in the same lines of things. Like, if you want to be super awesome and specific about it, separate them. But that's going to be way more tedious for you, you know? Because you have to do all those expenses just for the guitar teaching. You have to, you know, split them up. You know, other expenses are not, you know, you just have to do 2 QuickBooks files. You have to do 2 spreadsheets, which would be a huge pain.
Yeah.
But if you get to the point where you're like, oh, these are really starting to be like separate, you know, really separate parts of my business, separate them, you know. Because on the tax return, you're going to want to do 2 separate profit and loss reports. So to show the teaching income and to show the, you know, art income or whatever. So, and on your tax return, you can have a bunch of different profit and loss reports. Like if you have 10 different jobs, you're going to want to show 10 different profit and loss reports. So they do like you to like split it up and show what you're doing, but it's kind of like a weird gray area for musicians, I feel like, because art is just like, you know, it's kind of all combined. So unless it's like really specific. Yeah. How are we doing on time?
We're at 12:40.
Oh, okay, we're good. I'm kind of done with my outline, I think. Yeah, do you guys have been so great about answering or asking questions. Do you guys have specific questions?
I have one more.
Uh-huh.
Just looking at the expense list, one that I didn't hear is I'm taking 2 college classes right now, like not for a degree, just related to like audio production and stuff.
Okay, that's continuing education. That's not on there, really?
I walked in late. So
I'm like, that better be on there. Yeah, you're continuing education, absolutely. And that's kind of like, that kind of goes hand in hand with research and development, I feel like. You know, it's kind of along the same lines, but yeah.
Yes, 3rd page. Bottom.
And yeah, whatever you're doing to further your career.
Okay.
Yeah. Whoever you're paying to help you, if you're doing that for any reason, like, yeah. And yeah, you guys, if you are confused or if you don't know if an expense is deductible, just like put it to the side and ask later, you know. Really the only thing you can't write off as a self-employed person is groceries. And most people think you can write off groceries, but you can't. So, what's that?
Clothes.
Groceries and clothes, yeah. Really personal. Okay, the liquor store too. You can't write off weed either, okay?
That's career-related equipment.
That's like, it's like R&D though.
What's that?
Research and development.
Yeah.
Stage travel.
Experiment.
Yeah, they're funny.
I do have a question.
Yes.
If I were to have a coffee shop job at the beginning of the year and then switch to like a W-2, like a salary job,
Okay.
would I like split the expenses and file all the expenses I had on that 1099 and that 1099 and then
Yes.
the W-2?
Yeah. So if you're just strictly 1099, then all of a sudden you get this W-2. I mean, but your art's going to keep going, right? I mean, you're always going to want to keep track of your expenses for the 1099 stuff.
Okay.
Yeah, because you're just strictly you being a sole proprietor, you are your own business, you know, on a daily basis. So, yeah, whatever you're gonna want to write off things on a daily basis, but you can't write off anything for the W-2 job. So, like, if you're going to that coffee shop or whatever the W-2 job is, like, just you can't write off the gas. So that's when you're gonna kind of have to just separate it out. But yeah. It's really tedious. It's a lot. And honestly, just the most anxiety and stress that I've seen is just leaving it to the end of the year. And most people, they get so frustrated that they just stop. And then they don't file, or they're just, I don't care about my deductions anymore. Like, I got enough in. I'm like, all right, well, you owe $5,000. Have fun with that, you know. And they're like, oh, like, you got to take that time, yes.
I just want to give you an endorsement as a very happy client. My wife and I have been with Alison for about 9 years now. And if you can imagine, I don't know if you've ever sat down with an accountant and said, so I'm a musician and you made 4 figures right now, you know, that kind of, they don't want to talk to you. And Alison sat down and talked with us and listened to what we had to say, and she's been doing her taxes ever since. So.
Thank you. That means a lot to
Over
me.
the phone.
Well, I mean, when she was here in Denver, we would sit down and, you know, and go through everything. And she made up lists like this, and really got it going.
I
And then
remember
when
those
she
meetings.
we gather everything up, and she cheerleads us through that.
I try to make it as easy as possible. It's stressful.
And then we have questions. We send email questions, and then she gets back to us, and it's been.
Thank you, Andy. I really appreciate that. Are you still the vice president of the Colorado Music Association? Oh, okay. Andy was the vice president of the Colorado Music Association for a while, right? Barb said she was interested in this event.
Yeah. Well, I used to say I was the Joe Biden of the combo.
Oh my God. So yeah, it's, this is kind of unconventional, but some of the best advice I could possibly give you as just a self-employed person is to listen to yourself and to listen to what's in your heart, because you're gonna have a lot of people try to tell you what to do, and a lot of people tell you what they think is good for your business when you're trying to build it, and don't listen to them. Listen to what's in your heart. That's gonna get you the farthest. That is what I've seen, is that the people who truly believe in themselves, no matter how broke they are for how long, I don't think that matters. I don't think being an artist means making a lot of money. I think it means putting your art out there the best you can be. But that means that you have to be healthy and happy, which is the hard part. When you're on tour and all that is brutal. Being on tour is like the most brutal thing an artist can possibly do, I think, especially health-wise. So from what I've seen is to just take care of yourself first and foremost. Like, don't worry about your finances. Take care of you first, and your finances are going to come after that. But if you're not happy and healthy at the end of the day, I don't think you have much, So that's really what I've learned, especially being self-employed myself. Like, I've been through hell and back. And I'm not a rich person. I don't make that much money, and I don't care anymore. All I wanted to do was be happy and healthy and have great clients and do good work, So that was a huge lesson in my life. My health suffered for a long time because I put everybody else before myself. It was a huge lesson in being self-employed. It's taking care of yourself. So honestly, besides doing it on a monthly basis, that's my best advice as an artist, to really just take care of yourself. Because when you get sick or something happens, it's so hard to deal with that in life, on top of everything else. What you guys are doing is harder than anybody else. And this entire being a self-employed artist is literally the hardest thing you could possibly do. And from what I've seen personally, from the artists that I know some of the most extremely talented people in this business, and they are some of the brokest people in this business. But at the end of the day, it's like, are they happy getting their music out there to people? Yes, They might not have a lot of money, and they will get there, You will get there. It just takes a long time, especially being self-employed. So I'm always here for advice. My contact info is at the end of that sheet. You guys feel free to, I have my business cards, feel free to find me on Instagram, Facebook, whatever. And seriously, if you guys just have any dumb questions, if you think it's dumb or whatever, just ask. I'm always available for questions, so.
Yeah, I just wanted to mention a few really great resources that we have in Denver. There's one called Score Denver, and they have free mentoring, like business mentoring, and can help you, they give out free contracts and can help.
Oh, that's awesome.
Yeah, it's pretty cool. And they help, I think they even help you do your taxes.
There's a lot of free tax services too.
Yeah.
No, guys, just pay me to do your taxes. What are you talking about? Don't go to a free place.
Well, Alison,
no, I'm just kidding.
Yeah, definitely hit up Alison.
I'm kidding. I have really great prices. But if you can get them done for free, go get them done for free.
SCOR.
SCORE.
Right,
yes.
Score. It's retired executives who want to mentor
Oh, that's awesome.
entrepreneurs.
And then there's another really great one that I went through their business boot camp. It's called Rocky Mountain Microfinance Institute.
Oh.
And they are just like amazing. They gave me like a free business mentor, accountability buddy, and a free like accountant for 12 weeks. But they
Wait,
did it
no.
for, like, anybody.
Let's not talk about this. You're taking my job away from me now. Free accounting for 12 weeks? How did they do that for you? What did they set you guys up
It was
with?
like they get it paid for by like grants.
Oh, okay. Oh, that's really cool.
Yeah.
That's huge. If you guys can find that, that's awesome.
Yeah,
I
our
mean,
MMFI, like Rocky Mountain Microfinance Institute, they help launch businesses really successfully.
it's a lot. Yeah, you can get it through the state and
Understood.
stuff.
Yeah. But it's like you have to go. It's like anything free. It's you go way behind.
Yeah.
And it's like students that are.
I mean, you can use like Tax Act or something online. I mean, there's online programs that are like maybe $13 to file the state return. But I mean, a lot of people use TurboTax, but a lot of people mess up
So
TurboTax
sketchy.
too. I know. I
If
don't like
you're self-employed.
TurboTax. I know. I feel I've amended more returns from self-employed TurboTax people than anything. And it's supposed to be like super user friendly, but people mess it up all the time somehow. I don't.
So what do you like? That was my plan for this year. 'Cause I used it with the premium last year, where you get the free like remote help if you needed.
Oh yeah.
with that.
I mean, just be careful. Just ask questions if you come to the point where you're like,
Right.
because that's where people mess up. Is they
That's where
click
I
the
am
wrong
at.
button and they file it and then it's wrong. You're like, oh, I gotta
Every
amend
2
my
seconds
return now.
taken care of.
Yeah. Yeah, like I said, like Tax Act or one of those other online programs, like those are really cheap too. I like Tax Act. I used to use that for people for a while. I feel like it just guides you through. I mean, it's annoying and it takes a while, but I feel like they're pretty self-explanatory. TaxAct.com. I think it's like $13 to file. Like the federal's free, but you have to pay $13 for the state. So if you want to do it at home, it's a good option. But like for clients who, I mean, I use Intuit's tax software, but I'm a tax preparer, so nobody else can use that. So like that's specific to me. But if I have a client that is broke or whatever and they don't want to pay me much to do their taxes, I'll use TaxAct. And I'll just be like, all right, it's $13 to file online. Let's just go that route instead of having you use my nice software. I mean, that one's super secure also. That's super secure e-file.
So what can I do? I don't have like official or paper receipts for everything I'm taking back on from last year. What can I do to?
Do you have your bank statements that you can print
yeah,
out?
I can dig those out. Yeah.
That's where I would start. Print out your bank statements, start highlighting. Cash receipts, you're kind of screwed on.
Right. No, I mean,
if
like,
you don't save those, those
yeah,
are kind of gone.
Well, some stuff I buy that stuff just like on Craigslist, so it's not.
Okay.
Really receipt for that.
Yeah, however you can find out the cost of everything you bought.
So, but how does it? What is I don't give a stack of those papers to the IRS. What do I just report it and then? And then-
Just all your expenses, you mean?
Yeah.
Yeah, on your tax
I
return.
just write it down. Okay. I don't
So
need
your
to, like,
tax
prove it,
return-
scan and upload.
No,
it,
that's
prove
actually
it.
a really common question.
That's what yeah. That's always been my.
I know, people are like, am I
impression.
sending you all your receipts? I'm like, no,
Yeah.
I don't want
Right.
any of your receipts.
Yeah.
No, but I do. I get the classic shoebox
Yeah.
full of receipts. I'm not even joking. People send me shoeboxes with receipts. Like one time I just opened one and all the receipts just like floated out. I was like, what? I was like, this is not good. No, you're going to want to put your expenses into categories.
Right.
So one total for each category.
Okay.
And that's what you're going to enter in the tax software.
Okay.
So you don't need all the receipts and everything. You need it when you're getting everything together, and you want to save those for at least 5 to 7 years.
Okay.
Okay?
Yeah, it's just like up until like 4 years ago, I was just like a one W-2 guy.
Yeah,
and so
that's-
like a lot of my questions were just procedural. You know what I mean? Like Schedule C, I've never seen. So
Yep. Yep.
how do I do it?
Yeah. It's a lot for sure. Yeah. But you're asking the right questions. So you just need to print out your bank statement and get make one category for meals. Get all, do a spreadsheet, put all the, transactions for the meals in, and just add it up at the bottom. And that's for the whole year. But if you're doing it monthly, by the time you get to December, you'll be done. And you'll be like, oh,
I think
sweet.
we'll take one more question before we close it up.
Tips.
Oh, like when you're serving?
No.
Oh.
When you're gigging.
Oh, yeah. I don't know. Sorry. Yes, when you get
So
tips.
what I've been doing is pretty much everything that I can pay with my debit card I do. And
All your
then
cash.
all the cash, what I try to do is just have it in a fireproof box. And then
It's not a bad idea.
and then when I need it for bills or rent or
You
whatever,
have to save those receipts.
is that
Or do you put it in your
then
account?
I put it in the account so that I can pay
Okay.
rent and things. So
Well-
that I know I have to claim it and keep track of all
Yeah.
the deposits and if that was cash or if that was
Right.
a gig coming in and
Right.
and right now it's just all one
Yeah.
personal checking account.
Yeah.
because I'm-
Yeah, I totally understand.
so I'm like, what is
Can you label your deposits when you're making them into your bank account?
what I've been doing lately is writing it on the envelope and saving those. Like this date,
Yeah,
I
that date is,
deposited this
that was
much,
cash,
and
yeah. That's like, whatever you have to do to keep that organized.
okay.
Here's the thing with cash, you guys. Like, a lot of people don't count their cash because that's the one thing you can get away with. But I do not advise that at all. First of all, anything that is deposited into your bank account, you're going to have to count. Because if you get audited, they're going to go straight for your bank account. So if anything that was deposited in there, make sure you're counting as income, okay? The cash is the only way you can get away with it, because how do they know how many tips you got that night? They'll never know. And if you put it in a safe box, nobody's ever going to know. So that's the only way you can get away with not counting it. But if you're trying to write off a bunch of expenses and not counting that cash, your numbers are eventually going to look strange. You know?
So like if you're trying to pay rent in cash so that you don't have to count that cash.
Well, rent's a different story.
Because rent would be a personal expense unless you're counting off that part of the rent for
Yes,
that
the
home
home
office
deduction.
to that.
You got that right, yes.
So I'm like, do I need to switch,
I wouldn't don't worry about that.
Okay.
Don't worry about your rent amount at all, because, well, if you know how much you paid in rent for the entire year, that's all you need to know. If you can keep track of that somehow, just the full amount that you paid in that year, that's all you're going to need to know. Don't worry about those individual deposits for that.
Okay.
But the tips, that's kind of a different story. Like, you just have to be careful with not claiming cash, because your expenses are just going to outweigh your cash, outweigh your income when that happens, and then they're going to be like, huh, how did she spend more than she made?
It's like the tips are counting because I'm depositing a certain amount of cash for however much I need to pay my bills.
Yeah,
and be
that's what
comfortable
most
with
people do,
what's
actually.
in the account.
Yeah.
And then I usually have a certain amount that's saved always for those specific situations that come up, whether it's car repairs or rent or
Right.
whatever, and then just
Right.
have like a little cushion there.
It's okay if you're doing that. I'm not going to tell you not to do that, but I would just be careful about, saving that much cash and not counting, I mean, I see what you're doing. I totally see that you're just like taking it when you're, that's okay, because when you deposit that cash, you're still going to count that,
Right.
I mean, because that was income,
But then it just looks like I made it right then.
That's okay.
But I guess that's okay.
You're on a cash basis, so that's the only thing you could really get away with, though. Is that's not a huge red flag. But if you're continuously just not counting your cash and you're making a decent amount, that's going to start to look weird over time. But most people do what you're doing is they put the cash aside, and then when they need to pay their bills out of their personal account, they'll just deposit money. Everybody is so different in the way that they do their books and everything. Like, they really are, so. But like I said, if you have questions, just ask, But yeah, you really got to count everything. It's pretty important.